Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. This is Blockhead Traders for the week of November 17th, 2024, and in this week's episode, Viper XL 007 rejoins us from his very long hiatus from the show. And we are going to touch on a few different topics, kind of in the post-election buzz that's going on, because stonks seem to just go up. And it seems that the market has been incredibly relieved that the election is over, and it's almost like the volatility was just evaporated out of the room and the bottle cap came off and the markets are just skyrocketing. And it's not just the equity markets, the crypto markets have gone absolutely bananas as well. So we're going to touch on some of that. But before we hop to all of that, I want to give a shout out to our Discord, a link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading. Love to hear what type of content you want to hear about. Also, you can find a link to thetagang.com/sprocket888, where I post each and every one of the equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcasts. So subscribe to us, and if you can't find us there, let us know and we will get it there. But let's hop to this week's content. Viper, welcome back to the show. It has been quite a while, and I'm sure the audience is probably tired of hearing about my premium selling adventures, because that's pretty much what I do, so that's pretty much what I record. And if you are one of those people that like it, I guess I'm sorry to disappoint you. We're probably not going to touch much on premium selling in today's episode. Really want to welcome Viper back and say what the heck has been going on and what the heck happened to the markets here post-election.
Yeah. I was out for quite a stint there. And honestly, so it was kind of twofold. Like, one of it is October leading up to November, there's a big fundraiser event that I do, and I like to kind of focus that month on those efforts. But there was also a part of it of like, I'm still, and we talked about this on a previous episode, I'm still struggling to find my, I don't know the right word, my rhythm, not rhythm, but my structure, my strategy, my sprockets, volatility, the regimented play, that he does. And so that, leads to all sorts of emotional troubles in consistency for sure, but also troubles in, leading up to October. It was a lot of frustration. Markets were super choppy, which is a good segue in a minute. But also just, it was the feeling of running uphill or something, where it was a question of, do I even have a system? System is probably the word I was looking for. Do I even have a system, or should I just be throwing money in investments and then start a spin-off show, Blockhead Investors? Because it was just, I don't want to say tough, but I mean, it was one of those just emotional, like just things you got to work through when you're playing in market waters and trying to actively trade, and also split. Obviously, longtime viewers of the show know that I do split time between investments versus trading. But none of that has been resolved per se, but we do have directionality for sure. And so I know over in my land that has been significant, and hear me out, still frustrating somehow. And that sounds really counterintuitive, to have a ballistic market and still be frustrated. So we can unpack that in a minute, but I mean, how, of these, we'll say of just the last 2 weeks, when we had the crunch and then the pop and the volatility, did it hit you in any particular way?
Yeah, I'll say not ideally hit me, not terribly either, but kind of, going into the election, there was a lot of volatility. And I decided to play some of that volatility thinking, oh, great, this is going to be overstated. And so one of the plays that I put on was a strangle on the Russell. So the Russell index had kind of creeped up on its spot volatility of about 26%, something like that. And anything above 25% is like yeah, maybe. Anything over 30% is a yes, please, I'll take it. So I put a strangle out there, and I went out to the end of the month expiration thinking, okay, well, you know what? We're going to hit the election. We're going to get kind of a big nothing burger. The volatility is going to start deflating, and, the market will stay within the ranges of this kind of elevated play. And everything looked really wonderful, kind of the night of the election and everything. It looked like volatility was rapidly coming out of the futures contracts and the premium selling. And then the next day, I think the Russell was up like 6.5% for an index. Just ridiculous amounts up. And I went deep into the money. Now, the put side pretty much printed everything because there was no value left on that side because it left it in the dust. So that's one aspect of it where that was really feeling some pain, where the market is just skyrocketing and then you're kind of red on that position. And I had a few others because I really try to keep what I refer to as a delta neutral portfolio. So it really doesn't matter if the market should go up or down, I should be okay. Which also means there's kind of an equal number of trades that printed and an equal number of trades that kind of lost big-ish. But then once you stretch so far, it's more red. So it's what I call a drawdown, and it's one of the more disappointing and frustrating drawdowns because it's not a drawdown on a market decline. It's a drawdown on my account on a market progression. So that's kind of where it hit me, where a lot of the volatility came out, which was awesome. But the problem is, in a lot of my plays, there was so much rocket fuel that it kind of busted through the high side of that. So kind of negates and dwarfs the premium I had collected from the volatility contraction since it's breaching my strikes.
Yeah. So one thing I wanted to do was unpack that a little bit. And again, this is in true spirit of the show, meaning I, haven't researched the theory behind it or, specific this, that, or the other. But it did occur to me that this was kind of the first major election cycle that I think certainly me, but I think both of us were very active market participants in. We were active. Speaking to me, I was active in 2020, but really, so far removed from really paying attention. So I thought it would be interesting just to kind of unpack my view, my perspective of what unfolded and just the lessons I've learned just from this whole year so far leading up to such a major event. So one thing I wanted to take a look at, if we jump over into the VIX, which is the volatility index of the S&P 500. So we've talked about this previously on the show. Basically, number go up and the market is really volatile. Number go down and that volatility is exiting the market. Numbers stay flat and things are stable and calm or whatever. So this doesn't correlate to a price per se. You can have VIX go way up and price could go way up, or VIX could go way up and price goes way down. So this isn't a chart that, goes up or down per se. You can see it always normalizes to say around 10 or 14 here. But looking at the past year, one thing we can see is if we start in January and just kind of go through the summer, and we are going to ignore the giant elephant spike here in August because that was related to the unrolling of the carry forward trades in Japan and the yen and all that sort of stuff, which we did a whole episode on. We'll call that a black swan spike because that is an insane volatility spike. I didn't realize how far I'd have to scroll up to get that. 66 at the peak there. So the main focus, though, is ignoring that black swan event there. Most of the year we have a VIX that's fairly well behaved, very tame. And then starting September, so when we get really into the fires of election season, it just kind of normalized into this wild swing pattern going up to it. And then it should be no surprise to anybody that this big gap down from 20.4 on close to around 16.5 on open, that is election night into Wednesday, November 6th. So what I learned from all of this is we talk about it all the time. News is noise, and the market is always ahead of the news and all that sort of thing, which is all true. However, the one thing that I took away from this that I wasn't entirely expecting, and I think you touched on this, Sprocket, a little bit with your expectations of those trades when you were going into them, is that from my experience all through the summer, and I'll just jump over to it now. All through the summer, it was just choppy, particularly in the crypto markets and whatnot. And we can see that, like, if we look at the total chart here. And so this total chart is the entire crypto market cap. So this is every single thing from Bitcoin all the way down to whatever meme coin it just launched. So this is everything encapsulated. And we can kind of see what I'm talking about. This is the weekly chart. So this is a really long time frame, but I just wanted to kind of draw a box here of a key weekly level that needed to hold, which was this level here. And you can see for the entire year, basically, but starting in April, we were on this grind of a pattern here where the bottom was holding. We'd wick down a little bit, but we were just chopping. And then the election happened and kaplooey, we blew out of the channel and just went bananas. So bananas. So going back over to the VIX, what I took out of this was the understated impact of such a major news event. I don't even know. I mean, we feel like we should call it an event, but the understated impact that I expected from that, where now in hindsight, the power of hindsight, it feels like that chop was, because we've always said it, and I'm not us, everybody says it, that the market is ahead of news events. It's ahead of actual events, financial events, and all that. So I feel like in this particular case, leading into the election, the market hates uncertainty. And in pretty much any election, things are uncertain. And in this one, there was certainly tons of uncertainty of all the talk of this is a 50-50 coin flip and all that kind of stuff. So in my opinion, unresearched, and we'll get your thoughts here in a second, Sprocket, in my opinion, a lot of that chop was just different types of traders, different types of investors preparing for different outcomes and trying to do what the market does, which is stay ahead of real life events. And so everybody's doing that in a different way. And so we just had this choppy wish water, particularly September, October, but even back into the summer. And then all of a sudden it's a deadline thing. The election happens, and much more so than who wins, it's more that it is done. And now there is no uncertainty. Things are certain. And now the market is looking ahead to whatever next event it's trying to price in. And I have thoughts, but I'm not even going to, that's beyond the scope of what I want to talk about as to what it's looking at now. But that was my takeaway, that was the major event that most of this year we were chopping up to finally happen. And now the market is more unified in what it's trying to price in for whatever comes next.
Yeah, I think the analogy that I would draw here, or the image that comes to mind, is If you've ever watched the movie Finding Nemo, and they're out there in the ocean, and Nemo and everybody's kind of scooped up in this big fish net with a bunch of tuna, I think is the type of fish, right? And they're getting all kind of pulled up by the fishing boat, and all the fish are like, oh my gosh, what are we doing? What are we doing? And they're kind of all going in different directions. And then at some point, they're like, no, we got to all swim in the same direction. And then they can kind of like pull the net and kind of pull everything down. I think that's a good analogy of kind of what uncertainty brings, whether or not it's an earnings announcement, a pharmaceutical release of a drug testing results, an election, something like that. Is you get all these different individuals kind of doing disparate things, right? Because they have different theories, different ways it's going to pan out. And that causes different trades to occur in the market and different things to go on. And you get this kind of push-pull where you're like, oh, everybody's going to, oh my gosh, inflation's getting really bad. We're going to go this way, go this way. Oh, wait. What about, and go this way, go this way, go this. And then as soon as the election's kind of over, they're like, okay. And then uncertainty's kind of gone. And then everybody kind of charges off in one particular direction or one area. And I see this, right, on not just elections, but in earnings announcements. I constantly play earnings announcements, right? And you get this whole theory leading up to the earnings, what's going to happen. And then once the earnings announcement is up, either the outcome is, oh my gosh, this company's going bankrupt, or, not really bankrupt, but, is a negative sentiment all across the board. Then everybody piles in on that side. Or, oh my gosh, we're going to the moon, and everybody piles in on that side. Or, wow, that was a big nothing burger, and then nothing happens, and all the freak out and volatility becomes null and void, which is what I try to trade, because most of the time that's what happens. So that's the analogy that kind of comes to my mind when we kind of talk about the stuff leading up to a binary event.
Yeah, and I think that's a good analogy. I think that what's interesting to me is just everything at scale. And so I certainly would continue to pull back on your earnings trades and your earnings plays and things like that, because those are the exact same things, like you said, the exact same forces, just on a much smaller scale, because it's one company stock. And so this to me is the same exact thing. It's just on a much bigger scale because it involves the entire market. And so now we're past that, and we have a direction, and yet I still feel frustrated. And so I'll continue to use the total 3 chart here because why not? But it's mostly a frustration based on, like, if I go away from the weekly time frame here and down to like an hourly or something that I'm trying to trade on, like day trading or whatnot. And what I don't like, and again, I realize how dumb that sounds and whatnot, so hear me out. What I don't like is, and we kind of talked about this with Apple stock years ago when Apple was doing this sort of just infinite grind up. It's sure, from a capital perspective, it's great. You just throw money in the machine, you throw it in the direction it's going, and it's like jumping on a treadmill, and you just whoop, it takes you with it. So obviously from that perspective, awesome. Why are you so frustrated? But it's frustrating because it's hard to know, as the opening slide indicated, it's hard to know if my process is working, which is the price action, the charting levels and things like that. It's a lot harder to discern if it's working or if I'm just throwing money into a printing machine and it just happens to be going in a certain direction and hooray, it worked. So I guess to compound that, I try to, I don't think this is masochism or anything, but I try to check myself that even, because I firmly believe even in one of these up only situations, you should still be able to take a short scalp, a very fast short scalp, and still be profitable on those shorts. And so I do try to do that, because again, it's all price levels. If you have an invalidation, if you have a failure, there is a pullback level that it should be going back to test. The problem in an up-only market, I mean, and it's reverse if everything's going down, is that retest in a super strong market is going to happen potentially really fast. And so if you don't have orders set, if you miss it by just a hair, then you're really bunked because you missed it by a hair and now it's flying up and hitting your stop loss and things like that. So purely from my do I have a system and is my system working perspective, it's frustrating because you don't get the wealth of opportunity to test the system as you do in a choppy market when there's all kinds of price levels forming and invalidating and whatnot. But I get it. Maybe it's a stupid complaint as long as you're longing and not trying to short against the tide. But that is one struggle I feel like I've had. And I don't know. I mean, does that relate to your issues with, I mean, well, I guess your issues were kind of slightly different because it was VIX cooling, but then it was still just running away.
Yeah, I wouldn't say, I mean, I equally had those similar frustrations very, very early on, right? When I was kind of learning my strategy and learning my technique, where it was hard to discern whether or not, oh, this is working, or am I just getting lucky because the market's going up? But I think I'm kind of past that, at least on my bread and butter type of trades. So yeah, my frustration, which is one that I've always said exists, and it's kind of a bad thing where for newbies, I never say to sell calls ever, because there's a lot working against you. And one of the most discouraging things mentally, because as we've talked about on this show, trading is a lot about a mental game. That's about where's your headspace and stuff like that. And as a new trader, selling a call, naked call, and having it move against you can be really, really, really bad for your psyche, because everybody around you is making money because they're not, they're they're going in that direction, right? And then you're like, wow, I'm losing money. Whereas, on the downside, it's not the same, right? Because the stock is losing value, your put is losing value, right? You're kind of in the same proverbial boat, right? But the real mental anguish comes from, wow, the market's going up and I'm losing money, which is different than what you're talking about.
So kind of on that note, the last thing I wanted to talk about is on the options note is this new product. It's a new product specifically for Robinhood. This isn't generally a new product. There's a lot of different flavors of it out there. But in this case, it was an election market, a presidential election market. In general, Robinhood is referring to these as contract markets or contract event contracts. But I thought this was interesting, and I wanted to unpack a little bit some parallels of this to potentially some parallels to options if you've been options curious, but wanted to just kind of very, very beginner mode break it down. So basically at a very, very high level in this particular case, what this was the presidential election market. And basically in Robinhood, you went to a special page and you could buy a contract for who you thought was going to win the election. And those contracts carried a different price to them. Whoever, and you could think of it as like the polling. So if somebody was polling at 60% and somebody was polling at 40%, that would be 60 cents and 40 cents. Everything is between $0 and $1. So you would go in, you would buy X number of contracts for who you thought was going to win the election. It's always a binary choice as far as any of these event contracts. And then at the time of the event, and in this particular case on Robinhood, the event is a January 6th swearing in. So whoever is sworn in, that is the official end of this contract. It wasn't just election day. And I mean, that kind of makes sense because of all of the different voting counting. You don't know what that situation is going to look like. So they put the deadline of the event on January 6th. So technically you could still trade this, but you're really going to either be not getting a lot of money or risking a lot of money. But anyway, so the price of it fluctuates. And like I said, it fluctuates based on that normalization to $1. And in my particular case, like I wanted to just play around with this, just experiment. I had a small amount of money left on Robinhood in one of my Robinhood accounts. So I was like, well, let me just throw, $50 or whatever it was at it. And I logged on the morning that the market opened. And at that point in time, Kamala Harris tickets were selling for 38 cents. And then Trump was the inverse of that. So 62 cents or 60. You do the math. So I was like, well, first of all, because I already understood the mechanics of basically equating that price to polling, to the polling we had known up to that point. And so I saw two opportunities. One was obviously an underdog opportunity of like how 38 cents. And if she won, then that would normalize to $1 and I would capture that. I paid 38 cents for one ticket. And if she was the one sworn in on January 6th, I would receive $1 for that ticket. So I would make in profit the delta between $1 and 38 cents that I paid for it. So that's the main opportunity. The second opportunity was I was like 38 cents, aka 38% polling. I was like, that is wildly under what the media polling was. So I was like, opportunity number two is this isn't a binary bet. Like this isn't a horse racing bet. This isn't a casino bet where you throw your money down and the money's gone. This is a trading market. And so opportunity number two was, hey, if I load up on these 38-cent contracts and I believe that the price will reflect more closely, it will normalize to the media polling because people are going to use that media polling as a bellwether of what the price should be, what the relative realistic price should be. So that's a gap at 38 cents to say 46 cents or something like that. So that was opportunity number two, was a much shorter play of load up on a bunch of these at 38. When we set a limit, you can set limit orders and all that kind of stuff. Set a limit order for 45 cents and then offload a bunch of them. You make the profit from 38 to 45. Who cares what happens? You took advantage of that price discrepancy. In hindsight, option number two was a great way to go. I contemplated bringing more money in because I truly believed that was a play, a very well reasoned, understood play. But I was like, I'm just going to touch this thing with a little bit of what little money I have here. So I'm just going to ride it out. I didn't actually take the option number two trade, though it did perfectly play out exactly like I mentioned there, where I think she went all the way up to 48 cents at one point on November 1st or 2nd. I didn't take that trade, but it happened as I anticipated. So bringing it to options, the reason I think that this is options adjacent, but I'm going to say that very loosely because there's so much more complexity, granularity, determinism to options. But at a very high level, you have a contract that you bought and you entered that contract that if the expiration date, this thing happens, then this thing will be worth X amount, in this case, $1. And so that is very options contracty, at least to me. And then the fact that between now and then, the market will change the price of that contract. And so this is where it still feels like options, though real options have a lot more different market forces, all of the Greeks and all that other stuff that Sprocket talks about. But the fact that it's not a binary bet, the fact that it's a traded market, the fact that you could do a mean reversion scalp, like I referenced, 38 cents to 45 cents, those are all very normal options trades. where you're betting on that premium to change a certain amount. When Sprocket runs some of his options trades, he just gets that 40%, doesn't wait for expiration, shakes it off, and goes and finds another thing. So I thought it was an interesting product and one that sparked a lot of thoughts of options in my mind. To the options no, not professional. We are not professionals here. To the options enthusiast, I mean, does it strike you in a similar way, or are there some pretty large deltas that you can't get past?
Well, I think it's, yes, similar in concept. I mean, I probably it's kind of like, hey, we golf is just like going to, Pebble Beach or something like that, right? And golfing with real golf clubs. I think there's a lot of mechanics that don't exist here, right? It's the same in the sense that you're basically making a trade on a future outcome, and that outcome has some set of value if one way and then nothing the other, right? In the money, out of the money option parallel. I think there's a lot of like derivative mechanics that don't exist here. And so, yes, I get where you're coming from, but I would probably take it more of the, yeah, we golf is just like real golfing, right? Where it's like, yeah, no. So that's kind of where I was. I actually came across this product. I didn't realize that Robinhood had this. I came across this not that long ago in Interactive Brokers, my brokerage account that I use mostly now. And the way that they do it is very similar, right? You get $1 on the outcome, and they have everything from the election to, are Fed going to cut by 0.25%? Are they going to hike by 0.25%? All these different event stuff, and they basically call it forecast contracts is what they call them. But the interesting thing on Interactive Brokers is there's no commissions. I don't know if Robinhood has commissions on these or not, but Interactive Brokers is no commissions. And they have an extra interesting thing where they pay you interest for the money that you put in there. So let's say I had, entered something and I had, $1,000 to buy, whatever, how many contracts that gives me of whatever option is there. Whatever that money closes at each day in value. So if it's, 50 cents a contract and you add up all the contracts and it's $1,000, the brokerage will credit you 4% interest on that time period. And every day they redo it at the close of that market day. And ironically, the first thing that I thought of is genius. Like, now they're actually coming up with a more clever way to actually do polling that might mean something. And think of all the valuable insight that the brokerage is going to collect off of this to know they can take, what events are happening in the market when all of a sudden a volume of trades comes in for, will the Fed cut interest rates, right? Think of what they're looking at, when the Federal Reserve is doing their CPI numbers or their PPI numbers. And the reaction there. It gives a lot of insight into what the general public or retail trader is thinking based on how they're wagering, whether or not that's election or an economic event or something like that. And so it's kind of a way that it makes sense to get better insight by incentivizing people with money to go, put your money where your mouth is and see what they're really thinking versus, the people randomly calling landlines and going, so have you thought about the upcoming election? So it was very interesting concept.
Yeah. One other thing this reminds me of just now, blockchain validators.
Yeah.
Like, it's very much the same thing of like, you are, and again, we have plenty of other previous episodes, but in being a blockchain validator, you offer up financial stake to as collateral to you being a good faith actor in that case to the blockchain. And so this, I mean, to your point of more accurate polling, it kind of feels similar in that way that you're putting money into this, and so therefore you are much more likely to be more truthful than, like you said, when somebody just calls and is like, oh, and you're just going to mess with the person on the phone and be like, oh, I'm going to do it. Like, so I think it's a similar concept there that there is a common denominator in the whole skin in the game type of situation.
All right, so that brings us to the end of this week's episode, kind of touching on just the post-election environment and what the market generally is doing, and what our thoughts and opinions were to that election and the impact that it had on each of our portfolios from a trading mentality to actual realization thing. So hopefully you found this chat just a little bit interesting. If not, hop in our Discord and let us know what you would rather us talk about. And we'll draw up one of those episodes and cover that interesting thing for you. Otherwise, you'll be stuck with whatever is on the front of our minds each week as we continue on. And who knows what next week will bring. We're kind of coming into the holiday season, so I'm kind of anticipating a little bit of a back down in trading volume. And, we'll see if the proverbial Santa Claus rally shall arrive again. I was reading an interesting statistic that was talking about in election years, almost always, with only a few rare exceptions, does the market trend up from the election day to the closure of the year. So we will see how it pans out as we march on towards the end of 2024. So good luck out there in whatever you're trading. Hopefully you're finding your system, your niche that excites you and keeps you in the market. And always, remember, think outside the block.